Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you, as always, for making time.
Good afternoon.
Well, let's start with Wall Street, where stocks were strongly higher overnight ahead of that inflation data and the interest rate decision this week from the Fed. Energy stocks in particular were higher as the decline in oil prices seemed to turn around a bit. What's the story in the global markets?
Yes, if you look at the Dow Jones, it climbed by more than 500 points, closing above 34,000 on Monday, while the S&P 500 and Nasdaq Composite rose by 1.4 and 1.3% respectively, as the investors welcomed the positive data regarding the U.S. inflation outlook. If you look at the New York Fed Reserve report, they're saying that November showed a respondents to see inflation running at 5.2% pace, which is the lowest since the August of 2021. However, though, of course, still the volatility is expected, as we are expecting the CPI number to be reported on tonight. And also the Fed is expected to raise the interest rate on Wednesday, most likely by 50 basis points, slowing down from the giant step of 75 basis points in the previous month. Now, on the corporate side, if you look at the Copa Software and Horizon Therapeutics, all showed a very sharp rise in share prices. And also, some of the stocks are showing a quite positive movement, including the Oracles, because of a lot of the news related to M&A related news are coming out. Also, if you look at the Microsoft, it showed about 2.9% rising as the 10-year partnership with the London Stock Exchange Group is announced, and also it is taking about 4% stake in the UK browse operator. So all in all, there's quite a lot of the event-driven stock price movement. Of course, we will have to wait and see how things play out with the inflation number as well as the Fed interest rate hike. But nevertheless, the speed is expected to slow down in terms of rate hike, and also inflation is expected to decelerate.
Well, Korean stocks, meanwhile, were more or less flat today, giving up some early gains. A similar story on the KOSDAQ and the KOSPI. Gains for chipmakers, financials, healthcare, though. Tell us about the domestic market.
Yes, today the Korean market showed quite a bit of a volatility, and it's due to because of the foreign investors who were the major net seller of the Korean market. They sold about 113 billion won of the KOSPI, and also they sold a huge amount of futures by about 540 billion. Causing some of the sector like automobiles showed a quite significant drop, as well as the alternative energy sectors. In terms of where the prices were strong, the retail sector did quite well, and also the shipbuilding did well, rising by about 2.6%, and also quite a lot of news regarding the pharmaceuticals. COVID-19 related stocks were showing a quite significant move. The overall pharmaceutical sectors were up about 1.6%. Of course, if you would look at the government bond rate, it is decreased to 15-week low of about 3.5%. This number did go up to as high as well above 4%. That caused a quite significant drop in the KOSPI. If we calculate the 1 percentage point rise in the interest rate means about 400 points decline of the KOSPI index. That is more than 15% of the index disappearing as the interest rate goes up by more than 1 percentage point. But as I said, the interest rates are showing a 15-week low, and also the Korean won has appreciated. Right now, it's at about 1305. Relative to the previous peak of about 1440 territories. So all that means is that the foreign investors' interest should be increasing, but surprisingly today, the foreign investors were net sellers. So right now, the direction is not really determined yet. People are worried and concerned about what might happen to the economic growth rate at global scale in the future.
Well, speaking of global growth, Korea is affected by that, of course, seeing the biggest trade deficit in its history this year at more than $50 billion. So the first deficit this year, 14 years, and likely to continue into next year as well, some say. What do you make of the trade situation, Mr. Yu?
Yes, clearly that is the key concern, and that caused the Korean won to depreciate quite significantly this year. If you look at the South Korea's trade deficit numbers, because of the soaring international energy prices and also slowing down of the export numbers as the economy slows, that caused the Korea to report trade deficit of about 47.46 billion as of Saturday of this year, which is the largest ever since the previous of 1996. It's about 2.3 times the previous all-time high of about 20.62 billion recorded in 1996. Clearly, this is because of the huge jump in terms of the oil prices and energy related. The country's import of crude oil and gas and coal spiked by 72.7% year on year to 180.4 billion this year. That caused the significant deficit numbers. However, as you know, the oil price has declined quite significantly since the peak of the early this year. Now it is at below $80 per barrel. Nevertheless, of course, it is higher on average, but it is showing quite a bit of a stabilization. Of course, we need to look at further of what might happen to export growth rates. Right now, Korea is suffering from the DRAM demand or the semiconductor demand slowing quite significantly in the second half of this year. But hopefully next year, we are expecting some of the numbers to recover. In terms of the DRAM and semiconductor demand, most likely should bottom in the first to second quarter of next year. And most likely the second half of this year, next year should be quite a bit of recovery. And also, a lot of other related export sectors should be doing reasonably well in the second half of next year. So applying the much lower oil prices and also improvement in the export, most likely the deficit numbers should be quite significantly reduced in 2023. If that's the case, Korean won should be stabilizing where we are, maybe even to further appreciate to about 1,200 won to dollar rate.
Well, all of that would be good to see. We'll have to leave it there for today, though, see what happens at the Fed and the market reaction later this week. Thank you, as always, for coming on the program, Mr. Yu.
Thank you very much.